Hey everyone, it's Tom Gentile. Welcome to Tom's Trading Room. It's Friday, October 9th, 2015. And what I want to do with you this week is I want to talk about the overall markets through October. And I want to get into something very big next week. I think it's the biggest earnings report of the week, and that is Netflix. So, let's get started. So, since the 30th of September, I have been talking and digging my heels in on why these markets are likely to move higher. We talked about seasonals. We talked about oversold technicals. We talked about fundamentals changing as Wall Street was going to look more towards earnings and less towards China. All right, and then finally, last weekend, I talked about a darknet signal that came up in the overall market. So, got a lot of questions. Actually had a couple of unsubscribes, if you can believe that. Those folks must have been short the market and did not want to hear what I had to say. But questions on what is darknet. So darknet, if you see in front of you here, I've got a kind of a visual of what darknet is. Darknet is the ability to look at channels, both long, intermediate, and short term, and find reactions within those channels. We like to call them channel collisions. And so what we have is a proprietary contrarian signal using channels, all right, to create buying opportunities in the market. All right, so you're looking at the S&P, and what I want to do is I want to move forward and I want to look at darknet for a moment. So I ran darknet on SPY over the last 1,500 days on the stock to see how many signals were generated in the last 1,500 days in the marketplace and how well did they work out. And what you're going to see is darknet, we had 6 trades since 2011, all right? All 6 of them worked. So we had a 100% historical backtest looking at the S&P, and also the latest S&P buy date was on the 30th of September. And if you look at the chart, here's the darknet chart, here is the buy signal, down here below 190, here is the current market, trading above 201. All right, now in the last 2 days, I've actually started to get my darknet exit dots. And these are trailing stops that start to trail the market to let you know that we are getting close to an exit on this particular position. But we've actually seen better than 10 points move in the SPY. That is fantastic. I mean, that's like 100 points move in the S&P index itself. We've seen huge moves up. I really was looking for about 1,000-point move off the low there in the Dow, and we are starting to see that. And so now darknet's saying it's time to move on. All right, and like I said, we expect this. I do think longer term, I think the markets are going to slightly move higher. However, the big bounce came within the last 9 trading days. And so there you go, guys. And you heard it here. You heard it here last week, and you heard it 10 days ago at the end of the month. Well, let's talk about some things you haven't heard about going forward. So next thing I want to discuss is earnings for next week. We got 3 big companies on the docket for next week. Netflix, United Healthcare, and Goldman Sachs. Of the 3, I like Netflix the best because, more than likely, because it's the first one coming up. All 3 of these have some really interesting characteristics in so much that they're beating their estimates more so than not. Netflix is 7-1 on beating estimates versus estimates beating actuals. UNH 7-0, and Goldman Sachs 6-1. Now, we can look at all 3 of these, but I simply want to look at Netflix for more than one reason, and that is because, A, it is at the top of the heap here because it's the first one coming out next week of the big 3 that we're looking at. But more importantly, it's not so much the actuals and estimates, but it's what the stock did before and after the past earnings that excite me the most. And so as we move over to the next screen, I want to show you something called earnings effects. And earnings effects tell me I can look at price changes before up to 4 earnings and after up to 4 earnings. I can also look at IV change. What did the options do before and after those earnings? So let's take a look at all 4 of those very quickly with Netflix. The first one we're going to see is price change before 4 earnings. And as you can see here, the price doesn't move around a whole lot. I mean, it was up 5% before earnings on the last quarter, 9% before the quarter that, 8% of the quarter before that, and it was down 7% on the earnings that was four quarters ago. All right. So here we have more than likely Netflix is poised to move higher, and in the month of October, where we've got a money calendar pointing to the upside, I would tend to lean toward the upside movement of Netflix going into the earnings, which are scheduled on the 14th. Now, 3 out of 4 times up into earnings. Let's look at what happens after the earnings. So price change after 4 earnings. I'm going to do that, and you're going to see something that's actually kind of surprising. It continued up the last 3 quarters. 4 quarters ago, we saw a 26% pop to the downside, but we did see the last 3 quarters where we saw moves in greater than double digits. The question is that if you were to buy an option ahead of earnings, expecting a double-digit move in the stock, would the move in the stock exceed the price of the options? That's really what the smart option trader has to figure out. And that's where we go to a little bit to looking at IV. Now I'm going to show you what IV does before the earnings. So as we lead into the days up until earnings, we see that IV has been increasing on average of about 10%. All right, so we see a 10% move in IV. What happens after earnings? I think you guys can pretty much figure that out. IV drops after earnings. And if you notice here, look how much IV dropped on average. 45% after earnings. So as we see a stock that releases its earnings announcement, it's like popping the balloon of implied volatility, so you get that big drop in the market. So how do you trade something that A, looks like it's going to move higher, but B, not lose all your time decay and just replace it with hopefully more points in stock value than you lose in time value? Well, here's an easy answer. Perhaps selling options. All right, and I'm not talking about naked selling puts. I'm talking about credit spreads. Put credit spreads where you can take advantage of the volatility drop while still taking advantage of a potential upside move in Netflix. All right, guys, last thing I want to show you. Let's welcome someone back to Tom's Trading Room. As I've wanted him. You know, I've got Devin. He's our credit spread king. I've got Christina. She's the butterfly queen. And I've got Mike Wade. Mike Wade is our straddle master. But now coming in here within the next couple weeks is Nick Gazzolo. This guy is the prince of protection. And when I talk about protection, I'm talking about collar strategies. It's exciting to have Nick coming on board with us. And you'll be hearing from Nick real soon. Hey, thanks for joining me this week. Next week, we're going to get a deeper read into earnings season. And where did all the volatility go in the last couple weeks? Well, we're going to find it. We'll see you next week.